Hello guys, I'm glad to have you on board again today. Hope you've enjoyed your vacation times and holiday season with your friends and families, and as we're heading into year end, hope you're going to enjoy these ones as well. Of course, the same old warnings: do not drive under the influence and all of these things that you probably already are aware of. But still, let's move on to what we do best here, looking at charts and making analyses. So let's go right down this. We haven't been talking to each other for a bit. This is, of course, normal holiday season. I'm also enjoying my friends and families. So this is definitely the reason why, of course, there will be a little bit more delay until the next releases, and things will go right back to normal earlier next year. We're also going to plan for a big 1 hour and a half long type of video, which we do each and every year to review the past year. What were the major trades, how I've been handling them personally, and most importantly, what I intend to do for the year to come, what will be my major plans, making some long-term visions, scrolling down to larger time frame charts to see the big pictures and stuff that could influence the broader market perspectives. So we're going to save all that for this perspective, and even though we're going to make some introduction about that today, I will not dive into too much details, saving all of the important stuff for this very long video, because I would like this one to last no more than half an hour. But still, so let's review major crypto scenarios. But before we dive into this sector, which I know you guys like the most, I would like to talk a bit about the stock market, which is showing signs of exhaustion patterns, which we are going to easily describe. So of course, this is expert context, which means I do not want you guys to try reverse trading a market, but understanding that when the trends are reaching their end, you rather like to take your profits before the market reverses. Do not wait for prices to tell that you should have done something when you have all the evidence that you should do it now, okay? So without further ado, what is a reverse pattern? Okay, not how to trade it, but how to identify the end of something. It's really that simple. Here we are in a trend. Moving average is far below the context. The context has been unfolded, which means the end of that trend is pretty excessive, but it's still a trend. Okay, it's not a market excess. Market excess is when both the support and resistance lines, the resistance boxes, are unfolded one to another, which is not the case in here, just the support ones, which means the bulls are very, very aggressive. Pretty much, I think, not realistically, but still, that is reasonably what we can tell. Bulls are very, very, very aggressive. On the other hand, we're trying to accelerate by breaking cycles, and we are trading above the resistant context, pretty much at the levels of the trend channels, and we have all the clusters we need for a reverse trade. So it is now an appropriate time to get the fuck out of here. That doesn't mean short selling, once again. So very exhaustion types of signals in terms of S&P 500 global valuations, but it's not just the S&P 500. Okay, what that means, clearly, it means yesterday I've been profit taking some of my bullish exposition on the portfolio for stocks that are in similar types of patterns. To name the ones that I have personally, of course, do your own due diligence with the stocks you own and just do not blindly copy me. I'm giving you examples, but not guidelines. For example, mature trend, reversal pattern on Cisco. What have I done yesterday? Took my money off the fucking table. I'm also very carefully looking on a day-to-day basis at the dollar index. We are still trading this huge squeezing area, in which, just to set that as a reminder, we have a volatility boundary over our heads. That is, if my memory is right, the monthly moving, Bollinger Band. Let me just try to hide this one so you guys will see it. This Bollinger Bands, and I think we are able to set some time frame. Yes, so monthly, yeah, here it is. Okay, so as you can see, the monthly, Jesus, no, wait, I want the ones right now. What the hell is gaps? Okay, no gaps. Jesus. Okay, So here is our current situation, okay? But of course, understand that these levels will, of course, shift one more time as we head into next year, okay? Because next year means next month as well, and these will update. So the current status of this thing will update one more time, and we already have kind of the shape, so you might expect this thing to lower down to 97.2 or something on the Dixie. So at that perspective, I definitely think that we have reasonable probabilities to have the market being attracted by these volatility boundaries for obscure reasons that I'm not going to dive into today. But the market is liking volatility now. It's probably not going to be the case 10 years from now. The market always evolves, but also be aware of it. Okay, so the volatility boundary can be kind of acting as an attractor in the current given time. All right, until then, of course, we are in a squeezing pattern, meaning that we can just accumulate the energy to find at some point enough energy to release and go look for that volatility boundary before reversing. Or option number 2, we're going to reverse out of nothing for no reasons, or just because a catalyst just fucked it all up. And of course, you have to understand that the reason why I'm talking about it is that when nothing happens, the market will eventually, or statistically relevant enough, look for the volatility boundary as a risk limitation. To put it mildly and simply, basically the speculators wait for the volatility boundary to get a better risk-reward ratio to fight against. Or to put it simply, when I talk to every other professional trader that I know about, they basically all agree on the fact that we have far more probabilities to go down in the dollar now, but some are waiting for the volatility boundary to reduce their risks. Truth and simply, okay? But we also are aware that we all think it's going to go down anyway. So if we do not get there and if we start going down, then what's going to happen then? Of course, those who were waiting for this will understand that this is now too late and they're going to have to jump on board a market that's already going down, and they will push it further down the road even more. Okay, so understand that the volatility boundary is an attractor, but it also means that if we do not get there, people will rush their way out of dollar. Okay, so I'm carefully looking at the way the market will handle this area. I see a cluster in here near the volatility boundary acting like an attractor, but if we ever fuck it all up and reverse the trend, everyone will go out, and there is absolutely not a single support into the previously traded areas. So next stop is the previous support. If we reverse violently, catalyst or not, we're going to get straight back to 93.5 in terms of Dixie, and there will be no stops in between. So pay attention to it. Do not anticipate, but be very careful. That's the message. Okay, so why do I say that? Is because, of course, if we want to try to make sense of what's happening now in the cryptocurrency sector, we just pull out the background because we don't need it, and neither the basis. But okay, though in that perspective, if we try to understand what the fuck is going on with cryptocurrencies, because that is, of course, what you guys pay attention to and care about, you should definitely broaden your visions, but most of you do not. Though, cryptocurrencies. Okay, so I've tried to make it as clear as possible, but I still think that there are two cycles to come. One that is pretty mature. Okay, this one, starting from the big crash that we've experienced altogether in this summer. There's been quite a surprise for many of us. And therefore, we are in a weekly bullish cycle since then. This bullish cycle, as any bullish cycle, is supposed to extrapolate in an odd number of ways. 1, 3, 5, whatever. But normally, trend waves go in odd numbers. Corrective wave, though against the trend, are going into even set of numbers. 2, 4, etc. Okay? So in that perspective, we have 1, 2 upside legs, leading me to believe that there's a third one to come. Can hardly say how far, but I also have some intermediate targets that we've already highlighted coming from the cup and handle structure, and the fact that we have already reached validation, which is doubling down on the handle structure as a 1-to-1 ratio, and the other one is to double down on the big cup ratio, which is reaching us to $3.6 trillion mark as an expectable target for the broader crypto market. Okay, so the thing is that we've also talked about that multiple times, so I'm not going to go back down this road, but this is not going to be the type of leg in which the whole market goes up. And I've always pleaded for this, and I still do, because I have evidence for it, but I'm not going to argue about it, okay? So just trust me on this one. The market will not go on a single stage to the upside, everyone flushing the all-time highs and so on. Most of the market will not get there because last waves generally tend to be what I call quality waves, in which only the good projects will rise or the oversold ones, meaning that we have kind of a quality safety run. The money will go for the safest assets that can still provide organic growth or whatever. These are the, of course, Bitcoins, ETH that you know of, okay? Generally, the top 20 assets are having some demand backing them. Not all of them, because of course, those who are crazily speculatively overbought will suffer hard. And I'll go down this road eventually today on which ones are the riskiest assets. But the second thing you need to understand is that the oversold cryptos will also perform well. So it is not the appropriate time to decide on whether you need to dump that big crypto because it didn't really perform well. Kind of examples on Falcon for my own. It really did not react the way I thought it would, but it's still very much oversold. Anyway, we'll talk about that in another day. So what we're going to do today is to let you understand how to differentiate among the good projects. So stick with the top 50, okay? Do not go down lower valuations. This will just increase the risk taking. Of course, they can bring up better rewards, but this is not necessarily worth the risk. So stick with the big cryptos now, but what you can do, as we are still waiting to do another kind of pattern that I told you about, which is the K pattern, which means lots of assets have gone up into the previous bull run that started earlier this year, where everyone was going up. Then we've experienced the crash. Then has been the recovery at some point. Some assets are already trading all-time highs, but most do not, simply does not. So we are diving into this thing, which looks like what's going to be a K-shaped recovery, meaning that some assets will go up, some assets will go down, and the overall big picture kind of looks like a K. Okay, although not a big, okay, but understand it that way, okay? It's going to do something like that. So this looks like a K in the overall picture, okay? So we are here now in terms of crypto total, which means lots of assets will go down and a few quality assets or oversold assets will rise back up again, okay, and form that upside thing. Of course, as the global cryptocurrency capitalizations are expected to rise from approximately $1.3 trillion, the question is, where is this trillion going to go? Because actually, there will probably be far more than $1.3 trillion gains to be made on the good ones, because they will be probably $1 trillion losses on the shittiest assets. And that money will simply not go out of the crypto market, but in the good ones. So you need to understand there will be two motives into this pattern. The money flowing in the market, rising the market caps, the 1.3 trillion that will come out of external money, put it into the crypto markets, and the money that will go out of the shittiest assets to load back up into the quality or oversold ones. Understand it that way. So how to navigate that K is, or that K indecisive area is the crucial point you need to understand, okay? And as of this, of course, every rational trader knows that no one knows the answer to that question. So we're going to have to risk manage. We're going to have to put out some ideas, which we can argue about for endless amounts of times. Have your own ideas. I will share mine, but you do not have to copy them. You may disagree with me even. The thing is that use the strategy to risk manage the probabilities of being wrong. And hopefully we'll be right. And the matter is, the more you trade that way, you simply cannot be all the way wrong. So if you risk manage when you're wrong, and if you let it go well when it does right, then in the end, we all make money, even if we did some good choices and bad ones. Risk management is not what leads you to the right decision. It's what leads you to making money over 100 decisions. See it that way, and you will be much better at trading than those I see yelling out there, supporting their favorite cryptocurrencies and those crypto tribes that have been very violently communicating recently. And I hope this will finally stop in 2022. Topic for another day. Okay, so how to navigate in a risk managed perspective this K indecisive, very, very indecisive area. Well, I have multiple solutions that we've already talked about, but today I'm going to tell you about another one, which I'm getting particularly putting at work right now, is looking at valuation ratios. So to put it simply, this is not looking at BNB, BTC, or whatever. This could be one way to do it, but I think there is an underlying factor that many people are underestimating now, and specifically on some coins that have been recently introduced, those who have less than a year old kind of cryptos, because they suffer from huge supply changes due to the fact that most of them have investors' money, early investors' money, due to vesting schedules that are being released over time. So the supply is being, the liquid supply is being increased, and for some coins, it has been so severely increased over the last year that the supply has totally fucked up the actual link between valuation and token price. To put it simply, the difference between, for example, AVAX USDT and the AVAX token general valuation as a market cap has a significant difference. Let me just show it to you, for example. If you're studying AVAX, I'm just taking it as an example, okay? So please calm down, the AVAX army. You know I don't like the project, but this is my choice, and I never said AVAX is bullshit. I just said AVAX is way too overbought, but I'll explain. So the problem is supply. If you look at the price, like I said, lots of issues in terms of price structure, suggesting that a pullback can very well occur. But still, if you look at the AVAX valuation, and this is where we have to agree on the fact that we disagree, okay? I'm not saying AVAX is a bad project. I'm saying buying the AVAX token is a bad idea. But the thing is, AVAX is a good project. If you look AVAX, this is simply not an anomaly. This is a very beautiful trend. Okay, it has all of the sets of waves that I want, 1, 2, 3. It is mature, though I think AVAX is now going into corrective territory, but I don't think AVAX will go crash down the road. What I think is AVAX could consolidate to something like $15 billion and then rise back up again. Okay, but what will that do for the AVAX USDT token? What would be the price of one token for this? There is a significant difference in the shape that this asset is plotting against what you all look at, the AVAX USDT token price. It is the supply. Boys, just take AVAX as a market cap, divide it by AVAX USDT, and what you'll see here is the supply. And as you can see, on the 1st of January, the average supply was around 76 million tokens circulating. It is today 243. So in that perspective, there is more than triple the supply that there was in the earliest stages of January 2021. So in a year, we've more than tripled the amounts of tokens circulating. So yes, the price have risen, but on the bear market, the price of a single token will take it hard because of that diluted supply. Inflation on the number of tokens circulating on the supply side will definitely fuck up prices. I've said it. Now you take it for whatever it is, okay? So AVAX is not a bad project, but the AVAX token is not a smart investment, in my opinion. Do it whatever you fuck you want with that. Then, of course, why have I said that is I think when you look at valuation ratios, okay, though I'm not talking about investing in the tokens, but valuating the blockchains and comparing them one to another, we need to use the supply side aside, and therefore pay real attention to the supply side. If we just have to evaluate the cryptos one versus another, due to this immense effect on supply side on some cryptos against others, if we want to talk about value, use the goddamn market cap valuations and not the USDT prices, okay, of a single token. So the way I do this using crypto ratios, and we'll develop a lot about these things within the next few weeks. So today is more like an introductions, and I'll make a fully covered video about that possibly earlier next year in the educational sessions of the YouTube channel. So take ETH to Bitcoin ratio. Of course, in here we could use, we could look at ETH/BTC chart. It would make a bit of a difference, of course, but what's good in here is that the supply side effects will be wiped out. And we clearly look at valuation metrics. We're comparing the actual value of the blockchain ETH, depending on the tokens that have been circulating over time. EIP 1559 have been changing a lot of things. You know about that, okay? But this is how we truthfully compare one asset to another, okay? So we're not going to compare ETH BTC. We are going to look at other things, okay? Because in the K recovery, I definitely think Bitcoin will be on the top side of the K. No problems with that. There is clearly monthly trend going on with Bitcoin on this multi-time frame thing, okay? So Bitcoin will literally be on the upside shade of that K. Very likely going to happen, or very little to insignificant probabilities for this not to be the case. Same thing for ETH, and that's a choice that I've made, and I've released a video about that the other day for the French guys, and I think it's still something that I have to do for the English community. But to put it simply, no, I think I've put it out there. Is still ETH going to be there 10 years from now? Yeah, I think I did it. Okay, I'm not sure. If it's done, then this is what I'm referring to, and I definitely stand for it. Until proven wrong, I think ETH will be there 10 years from now. So it is an assumption. Until proven wrong, I think Bitcoin and ETH will be there 10 years from now, monthly trends backing them, so they will be on the top area of the K. Therefore, no point comparing them one to another. And as you can see, whoa, ETH is weighting exactly 50% of Bitcoin. So perfect equilibrium, and I think we're going to stay there. I see no reasons to go much higher or lower. I think we're definitely where we had to be. But here where I can add up some value is on other coins. For example, sold ETH ratio and so on. When I compare valuations of one asset against another, I use a set of rules. Okay, so this is not something you can put out of context. This has to be used in this context, comparing two valuations one against another. This is what I use, for example, if I want to compare two stocks. Okay, but as cryptos have a lot of difference between different projects in terms of supply driven metrics, then I sincerely recommend you to use the market caps. So how to do it is, for example, if you want to compare Sol to ETH, you're going to do this. You're going to type Sol, okay, use the down key, the down arrow key, put it to Sol. You're going to use the divided symbol. You're going to set ETH, do the same thing again, okay, and you're going to go times 100, okay, and this will put you that chart. Okay, of course, what's great is that you can do it in here as well. Okay, you can add the symbol so you won't have to type that all in every time you want to use that. Okay, so the thing is that once you've done this, you can compare anything with any other thing. Try to make some relative comparisons that make kind of a sense. So comparing Sol to ETH makes a lot of sense. That is really answering the question, how is Sol really an ETH killer or ETH competitor or whatever? To answer these questions, I have a strategy for this, okay? I will use my technical risk limitation, just like I always do, so I'm definitely paying attention to what my trend channels, context, and things like that will do. But I'm mostly having a first way of reading these things by looking at specific price target areas, okay? As we look valuation metrics of one asset against another, I pay attention to these areas. The first one is, as long as we're below 1%, I consider the asset I'm comparing to the reference, though Sol compared to ETH, as being totally insignificant. Basically, as you are below 1%, you do not exist relative to the comparison chart, okay? Then there is the 3 to 5% metric area, when basically the asset weights from 3 to 5%. And this is generally a cluster area. And you can try these comparison stuff on many other things like shares in the same sector or whatever. You will see the huge resonance there is over these clusters. So take them for what they are, or take just the way I gave it to you. And this is the area I trade. I know that there is a very likely chance for prices of two referencing assets to oscillate across these 3 to 5% area mark. There is also a significant chance to oscillate across the 10 to 15% mark, okay? And there is also, finally, a big chance to oscillate across 30 to 50%, okay? And of course, if you go above 50%, means that the assets you're looking at as a reference to another will take over, okay? Over 50% mean that Sol is very likely going to flip Ethereum in the future. Likely to doesn't mean will have to, okay? But this is the way I look at disruptive stuff, okay? So in order to take over on another asset, you have to range into all of these areas, starting from insignificant, going into, okay, I'm existing, but I'm still very undermined. Okay, I'm really there and I'm taking a bite of your own cake, but I'm not necessarily eating you away. It is just that I'm eating on your cake. I am a legitimate competitor. Okay, so considering it that way, inexistent, trying to compete, legitimate competitor, eventually taking over. Okay? So, ETH Bitcoin, 50% means as long as ETH remains above 30% of Bitcoin market caps and is still below 50%, we are risk managing the probability of ETH taking over the fucking Bitcoin. So what are we doing now? We're oscillating across 50%. So of course the ETH maxis will say, boy, flipping is inevitable. I don't think. I think that ETH to Bitcoin could still oscillate a bit in here, but we've also have to talk about the fact that we've already risk managed that probability for a long time. So I wouldn't fight against the rhetoric that says ETH will flip Bitcoin. I think it can happen, reasonably speaking, as long as we maintain bullish potential to this thing. If we reintegrate this area, then I'll change my motive to say, well, the range will extend itself and we'll go right back to 30% area before eventually try again. But have to understand it, now that this range is mature, I'm not fighting against the bullish breakouts, but that doesn't mean I forecast them to happen. Totally different things. Sol and ETH, what can I say about it? We've definitely ranged over the 3 to 5% area, broke it to the upside very brutally to set ourselves into the 10 to 15% area. We have a mature range in here, but I see absolutely no reason for these ones to go up, to go way more above that level, because the next area would be the area in which Sol would flip Ethereum. Like I said, I don't think it's going to happen. I definitely think that Sol will be a legitimate competitor to ETH. It will eat some of its cake pieces, but not put it out of the game. So in that perspective, this is my idea, and you can disagree with that. Like I said, on the ideas side of the equation, everyone can have its own ideas. I don't think Sol will ever go back to the 3 to 5%. It's definitely there to stay as well. I don't think it's going to take over ETH. So in that perspective, I think Sol to ETH ratio is where it has to be. So what do I do with Sol in my portfolio? I will arbitrage it against ETH. If it goes 15%, I'll sell Sol to buy ETH. If it goes 10% or something, I will start to sell ETH to buy Sol. Pure and simply. I'm not going to short ETH to buy Sol. I'm going to take my ETH and put them into Sol. That's really that simple. Swapping things into arbitraging their relative performance. Okay? This is really the way I'll do it. And I hope you understand the process. Like I said, you might have different ideas. Then trade your goddamn ideas. But in my personal opinion, until proven wrong, I think we're going to oscillate across these areas. Okay? If I take BNB, for example, what the hell would I do with this? Same areas have been plotted on the charts. So what's the story of BNB versus Ethereum? I'm going to take weekly charts so you'll see it better. Okay? So over time, what happened is that we overshooted the area, then we overshooted down, right down to going right back to 3 to 5% relative market cap, and we have rejected that area. Telling me one thing, I don't think BNB is worth a short competitive side against Ethereum. So I think definitely has proven the fact that BNB is a legitimate ETH competitor. It is. And the charts just tell me. What it told me is that in the past, we already had a BNB time in which BNB was supposedly more valued than the supposedly equilibrium area of 10 to 15%. What's odd in this chart, it seems to be that BNB ETH ratio is looking for excessive valuation. It doesn't like to stand there. At least it did not in the past, but I tend to believe it will in the future. Same thing, this is an assumption. What I can tell for sure is that the market doesn't like when BNB is too less valued against ETH. Just like the market doesn't like. As you can see, we totally say no when the market has gone there, and we did it very violently. So what I would say is that after hesitating, going against and above and beyond and below these supposedly standard 10 to 15% as being a legitimate competitor to ETH, we've rejected it up, down. Tells me one thing: the market doesn't want to go there and doesn't want to go there. So finally, I think it will settle itself into this area over time. So looking at the current valuations of BNB, 19% of ETH, I think it's a bit overvalued. Reason why: I am not overweighting BNB on my portfolio. I certainly do have some, because I don't know if, for example, it's going to settle there. That would mean that BNB is about to take over or trying to take over ETH, which I do not think is a reasonable idea. But as I have in front of me, I cannot wind it down. So I am thinking that this is the likeliest outcome, though I'm not overweighting BNB, but I'm not necessarily swapping away for ETH. I do have like 45% ETH on my portfolio against 2% of BNB. So what would be the point of swapping down these 2% to ETH? I stick with the 2% and I'm not changing anything. If I have a look at Link, for example, same thing, same areas, okay? Link has gone into the 10 to 15% area, didn't last it there very long. The area has been some kind of rejected. What did we do with the 3 to 5% area? We've settled ourselves in here and crossed it over, meaning that we should have probably spent a bit more time in here back then, try to go faster, found some strong resistances, and now huge drop down. I think we should have supported there, but the fact that we have gone too quickly, too rapidly up, means that we have now suffered kind of the underestimated effects. Are we going to go below 1%, meaning that Link is bullshit, should never have been there, it's going to be insignificant back again? I don't think so. So I think Link has the very likely probability to set itself back in there, and as we've gone lower than the area, I expect it to overshoot a bit the area as well. So on Link, looking at the way I have now, 2% of ETH, do I think Link is undervalued like crazy? Yes, I think. Am I overweighting Link on my personal portfolio? Yes, I do. I have more than 5% Link today. So it's really that way that I'm balancing my portfolio now as a relative market cap valuation against the references. My current major reference for this cycle is ETH, but of course you may disagree with that. So do your own research, do your own job, do your own portfolio management, do your own stuff, but understand that the way that you have to look at these things is as a market cap, not as a USDT versus USDT coin, because there might be supply side effects that you might have problem with. And in a second stage, okay, understand that you have to look at these charts through the prism that I just shared. These areas, 3-5%, 10-15, 30 to 50%. Okay, that also tells one thing. If we ever go below 1%, means I'm wrong. So this is basically where I will invalidate my current Link weighting in the portfolio if for some reasons we were to dive below 1%. Okay, so make your own choices. It really what matters the most. Okay, these areas are areas I've been trading with for years. You can take them as they are. If you do not trust me on this, then take your own charts and just scroll through hundreds of charts, and you will see that these areas are not magical. They do not predict the future. They are just relevant clusters that most markets will oscillate across. Okay, so understand it that way. This is just like risk managing relative valuations. You can make some technical analysis of it, looking at the way the context and things have been oscillating, because this is the things I use. When I say we overshooted these areas, it's because my context tell me so. We've gone pretty damn excessive. Remember what we said earlier, both the support and context boxes have been unfolded, so we've excessively evaluated Link and those things, okay? So this is the crucial, valuable information on today's podcast. Understand that right now, going on a tribal war against my project is better than yours or whatever shit that is, do not do this. Please end these endless tribal war that have gone on through 2021. As the crash has fucked up most portfolios, people have been going nervous and defending their projects probably because they've overweighted them in their portfolios. So stop doing that. Just start looking smartly at the market the way professional does. And This is one way they do. This is the way I do. And of course, like I said, there are many strategies out there. Many traders have different things, but we all tend to use the same ones in the end and come down to the same conclusions. So take mine as a good example. Make your own research if you want to see that for yourself. Look at 100 charts and you'll see that these areas definitely resonate. And well, try to make profit of these informations in your own day-to-day trading solutions. As we are into the indecisive area of the K recovery we've talked about, there's nothing more to do now than just looking at relative valuations and weight your portfolio according to the studies you've made. Do not just pick mines and copy, please. That being said, as we said, we'll schedule for a big video early next year in which I will go deeper into this analysis. As you can see, we got some other things to talk about. I'll review all of the other asset classes that we did not cover today, like yields and things like that, and volatility and all of these things. Until then, understand that the stock market is fairly overvalued and reaching out for reversal signals. So it is an appropriate time to lock on your gains rather than boasting for more. Also, though, enjoy the year-end celebrations. Do not drink too much and certainly do not drive under influence. Be smart and see you guys next year.